Investors will be watching out for the Federal Reserve's monetary policy decision in the week ahead, as well as Fed Chair Jerome Powell's press conference for further insights into the central bank's normalization process. Federal Open Market Committee had decided at its January meeting to leave the target range for the federal funds rate at 2.25% to 2.5%, and noted it will be patient as it determines what future adjustments may be necessary. Many in the financial markets had interpreted the FOMC statement as a sign that the central bank will refrain from further rate hikes and other quantitative tightening measures throughout 2019. With the rate of inflation having slowed somewhat in February amid trade-related tariff effects on commodities and import prices, market participants generally expect the Fed to maintain its wait-and-see stance. Meanwhile, data analytics research firm Sentieo has been employing natural language processing to build predictive models of the Fed's decision-making based on its meeting statements and minutes. This with an aim to get a better understanding of the trends behind the rate hikes, cuts, and status quos. We have with us today Jed Gore, Senior Data Scientist at Sentieo, to provide more details on this research. Welcome, Jed.
Hi, Steven. Thanks for having me on.
Very nice to have you here. Very nice. It's fascinating, this natural language processing. Can you tell us a little bit more about what this is, what natural language processing is, what it does, and what some of your top findings have been, some of your unique findings?
Sure. Natural language processing, or NLP, is a reasonably new field in computer science, enabled in part by some new open source libraries that have become available, along with computing power that has come available over the last 3 to 5 years. And we at Sentieo, really our core wheelhouse is viewing text as data, so rendering text into data and then providing for mechanisms to make sense out of all that for our buy-side clients to help them make money in the markets. So one of the things we did and actually do ongoing is we'll generate some of these research papers really on the side as part of our ongoing process. And we recently looked at the Federal Reserve meetings and minutes and try to get a sense of whether we can develop a predictive model for which way the Fed might be leaning at any given period. So for us, it was an interesting exercise, essentially flexing our core capabilities in something that might be of interest for our clients.
It's fascinating, and you're looking at the Fed, and you're looking at the meeting minutes, you're looking at the statements. Mm-hmm. Given these data sets, as you turn text into data, what can you say about the Fed's monetary policy path?
Sure.
Given they have their decision in the week ahead, and people will be very keen to know what your data may be saying.
Yeah, I was a buy-side analyst covering financial stocks for 15 years. So for me, when I made the transition back into computers and programming, this was an area of interest where I thought we could aim our lens at what the Fed had been saying over the course of the last decade. And you could really divide it into the 3 discrete periods. There was the Bernanke, heavy Keynesian, very accommodative policy. Then there was the sort of middle period with Yellen, who was still Keynesian, but she was a little bit more aggressive. And you actually can see it in the charts if you look at the progression of the relative hawkishness or interest in raising rates between the different Fed chairs. And the most recent and current Fed chair, Powell, is actually markedly more aggressive in his stance, although what we found with our analysis when we looked at it a month and a half ago or so was that the most recent meeting, the Fed had sharply dialed back their hawkishness and are, in my opinion, therefore, just looking at the text data, much more likely to return to a Yellen-era level of relative accommodation. I think it'll be interesting to see if that actually plays out.
Well, that's really interesting. You see that the aggression is tapering a bit.
Quite a lot.
Yeah.
It was actually significant. It was about a 40% drop in the amount of predicted interest in raising rates. So really, what we did is we took a corpus of, or a set of documents of the Fed meeting minutes, which are much longer text documents. It's a full description of the minutes of the meeting, and it usually comes out about 2 weeks after the Fed actually publishes its findings. And we use those to analyze the individual statements, which are extremely short, but are more real-time. So investors obviously want to know what the statement says or which way the statement's going to make people lead, but the model trains better. It's got a deeper and more predictive capability if you trained it initially on the larger data sets. So that's how we approach the problem.
So would your model say then, based on the text and based on this dialing down of aggression or aggressive strategy, that the Fed would stay pat on the rates?
I would certainly suggest that. And the interest level in this is enormous for two reasons, not just because what the Fed's going to do with rates, but also the $4 trillion of assets that they put on the balance sheet. And against the 19 trillion U.S. Annual GDP, it's not what is that, 20%? It's not an insignificant potential headwind in the economy. So people have tremendous interest in this in general. We found that with our clients, at least.
Well, that's terrific. That's really terrific.
Yeah.
So, Jed Gore, Senior Data Scientist at Sentieo.
Been fun. Thanks so much.
Been great. Thanks so much for coming.
Yeah.
This is really fascinating.
Thank
Natural
you.
language processing. Thanks very much. Investors will be paying close attention to the conclusion to the FOMC's monetary policy meeting Wednesday, March 20th, with the Fed statement due out at 2 o'clock p.m. Eastern Time, followed by Fed Chair Jerome Powell's press conference. In the meantime, select the event calendar option in the IBKR Trader Workstation for a full list of U.S. and global corporate events and earnings, dividend schedules, economic data, IPOs, and more. I'm Steven Levine for Interactive Brokers, asking you to enjoy the week ahead.